Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. Now if you like our content, please don't forget to hit the like button. Also subscribe to our channel and click on the bell button to receive important financial updates at the very earliest. Now Porinju Veliyath is one of the most successful stock pickers in India. Here we present 6 stocks which he has outlined as his preferred picks post budget 2018. Now friends, these were disclosed in an interview with ET Now, and also please go ahead and do your own research and please don't buy them blindly, just as what Porinju says, that you shouldn't go ahead and buy stocks blindly seeing somebody else, but you should use it as some sort of metric for you to go ahead and decide and evaluate whether these stocks are investment worthy. Please watch this video to know more. Also friends, if you think that this content is beneficial, please don't forget to share it with your friends on your social media profiles, because this could also benefit the other people who you are connected with. Now the first company on the list is ACL Infosystems Limited. Now the price at which it is currently trading is 57.10. The code for the company is ACL_INSYS. Now ACL Infosystems Limited is a distribution and information technology services and solutions company. The company's principal activities include cellular phones and computers / microprocessor based systems. Now if you were to look at the 1 year chart, you would see that the company has not done much, and essentially it's been at the same level at which it started the year. During the middle of the year there was some sort of rounding bottom formation and a dip, but overall this has not created much wealth for its shareholders. The market cap of the company is 1879.67 crores, which means that the company is a small cap one. The company does not currently have any EPS as it's not yet profitable, and the PE also is not applicable. The book value of the company is 34.06, which translates into a price to book ratio of 1.68. The industry PE here is 39.69, which means that the companies in this industry are generally a bit expensive. The dividend yield is not applicable and hence mentioned as 0, whereas the promoted holding is 62.89. Now the 52-week high for the stock stands at 64.70, whereas the 52-week low is 39.70. Now if you were to look at the reasons why Porinju thinks that this could be an attractive proposition going forward, he believes that the restructuring is expected to make the business simpler. Also, with the promoters' increased stake, this shows the increased confidence of the promoters in the company. The second stock on the list is INOXLEISUR, and INOXLEISUR is basically a multiplex operating company. Now INOXLEISUR Limited is trading currently at 283.60 and the code for it is INOXLEISUR. Now this company is engaged in operating multiplex cinema theaters. The company is engaged in the business of setting up, operating and managing a national chain of multiplexes under the brand name INOX. The company has a portfolio of approximately 110 multiplexes and over 420 screens in approximately 60 cities with a seating capacity of 109,406. Now if you were to look at the 1 year chart, you would see the company has created some wealth, but towards the middle of the year there was a large dip. But overall some money has been created here. The market cap of the company is 2735.54 crores, which means that the company is a mid cap one. The EPS is 5.93, which translates into a price to earnings ratio of 47.82, which is largely in line with the industry at 49.62. Now the book value stands at 60.71, which translates into a price to book ratio of 4.67, which is a bit expensive. The dividend yield is 0. Now if you were to look at the promoter holding, the promoter holding of the company is a bit low at 48.70, and the 52-week high for the stock stands at 309.90, whereas the 52-week low is 212.95. Now the reasons cited by Porinju are this is a duopoly industry and the valuation is attractive with respect to PVR. Also, it is a good play on discretionary income. Now the third company on the list is ITC Limited, and as we all know, ITC is one of the most well-known brands in India. Now the price for the stock is 275.30 and the code for it is ITC. Now ITC Limited is a holding company which is engaged in the marketing of fast moving consumer goods. The company operates through 4 segments: FMCG, hotels, paperboards, paper and packaging, and agribusiness. Now, if you were to look at the 1-year chart, you would see that essentially the stock has closed at the same level at which it started the year. However, during the middle of the year, there was a last spike, but it could not sustain, and the stock is something which has not created much money for its shareholders. The market cap of the company is 3,35,603 crores, which means that the company is a large cap one. The EPS is 8.99, translating into a price to earnings ratio of 30.62, which is a bit cheaper compared to the industry PE of 32.41. The book value is 37.20, which translates into a price to book ratio of 7.40. The dividend yield is 1.73 and the 52-week high stands at 367.70. The 52-week low is 242.50. Now, if you were to look at the reasons cited by Porinju, they are: Porinju feels that this stock is available at an attractive valuation and the FMCG business is expected to turn profitable very soon, which will also aid this company's business going forward. Now, the fourth company on the list is Tata Power Limited, and Tata Power Company Limited is an integrated power company. This company is available at 89.70 and the code for it is TATAPOWER. Now, the company's principal businesses are in the areas of generation, transmission, distribution cum retail, power trading, power services, coal mines and logistics, strategic engineering for defense applications, solar photovoltaic manufacturing and engineering, procurement and construction services. The company segments include power, coal and others. Now, if you were to look at the 1-year chart, the story repeats where it has created some money, but it's not been an out and out stock which has been on an uptrend. The market cap is 24,261.82 crores, which means that the company is a large cap one. The company is currently not profitable and hence the EPS is not mentioned, and consequently also the price earnings ratio is not applicable. If you were to look at the industry P, it's at 15.33. The book value of the stock stands at 55.64, which translates into a price to book ratio of 1.61. Now, the dividend yield provided by the company is 1.45% and the promoter holding is mentioned as 33.02. The 52-week high for the company stands at 101.80, whereas the 52-week low is 75.80. Now, the reasons cited by Porinju are: there is a restructuring currently underway, and this is a company which is a bet on the Tata's defense business. The next company on the list is HPCL. Now, the full name is Hindustan Petroleum Corporation Limited and the price is 392.35. The code for the company is HINDPETRO. Now, Hindustan Petroleum Corporation Limited is a holding company. The company is engaged in the business of refining of crude oil and marketing of petroleum products. It operates through 2 segments, downstream and exploration and production of hydrocarbons. Now, if you were to look at the 1-year chart, you would see that the company is essentially closing the year at almost the same level at which it started it. And not much wealth has been created here. There was a spike during the middle of the year, but that petered out. The market cap of the company is 59,787.18 crores, which means that the company is a large cap one. The EPS is 39.82, which translates into a price to earnings ratio of 9.85. Now, this is largely in line with the industry PE, which is at 10.49. Now, the 52-week high for the company stands at 492.80, whereas the 52-week low for the company stands at 319.15. The book value of the company is at 120.46, which translates into a price to book ratio of 3.26. The dividend yield percent is probably the most strong factor for this stock and is at 7.65. The promoted holding is 51.11. Now, there is talk of a merger with ONGC, and this is something which we would need to watch going forward. Now, if we were to look at the reasons why Porinju thinks that this could be an outperformer going forward, are he believes that the valuation is attractive versus ONGC in the deal which is forthcoming, and the diesel demand in India is expected to rise, which is going to aid this particular company. Now, the final company on the list is LEEL Electricals, and as far as this company is concerned, this company was initially called Lloyd Electric and Engineering Limited. Now, this company manufactures evaporators and condenser coils for air conditioners and heat exchangers / radiators. Now, this company is available at 279.35 and the code for it is LWL. Now, if you were to look at the 1-year chart, you would see that this company has not created any wealth for its stakeholders, and there was a huge dip towards the middle of the year. The market cap is 1126.68 crores, which makes it a small cap one. The EPS is 196.75, which translates into a price to earnings ratio of 1.42, which is dirt cheap. The industry PE is 58.74, which again shows that this company is absolutely available at free valuations compared to what the industry is trading at. The book value is 228.38, which translates into a price to book ratio of 1.22. The dividend yield is also very good and is at 7.70. So those people who go for fixed deposits would rather put money here. Why? Because the dividend yield here is much higher than what a fixed deposit is supposed to give you. The promoter holding here is average at 56.22 and the 52-week high is at 340.35. The 52-week low for the company stands at 166.10. Now friends, one very important analysis which could be drawn from here is the fact that most of these companies are some things which have not performed for the last 1 year and probably beyond, and this set of stocks could be a play on the fortunes of this company changing for the upside, and this could be probably one of the reasons why Porinju has gone ahead and chosen them as probably turnaround stories or companies where the future is expected to be better than the past. So friends, please don't treat any of these as stock recommendations. Please go ahead and do your own research, and this is all what we wanted to show you for today. Thanks for watching. Please subscribe to the channel if you still haven't, and we will see you soon with another video.